Ethereum Classic is yet another cryptocurrency that I foresee some potential in. We had a pretty good rally over the past few months and a pretty ugly crash ever since. We have a setup in place currently that could take us up to $391. And depending on which alternate we have and how we progress, there could be a target over $1,000. So let's take a look at our historical structure here, just to get an idea of what we're seeing here. Unlike Bitcoin and Ethereum, the structure in Ethereum Classic is a little bit different. We had a pretty good rally back in 2017 to 2018, and that took us up to approximately, what was it, about $44, $45, something like that. I'm going to call that a large wave one. And just to clarify, we had another small rally way back here, and that gives us a pretty good idea that this could be a wave one. So like I said, I'm going to take this as the wave one. We had a pretty long correction in what I'm calling the wave two. And that wave two is interesting here because if you recall Bitcoin and Ethereum's charts, we had a lower low back at the end of 2018, but a higher low in the March 2020 overall market crash. You don't see the same thing in Ethereum Classic. We actually have what appears to be more of a double bottom. So that tells us that this could be a 1-2 rally, but I'm favoring the view that this really is a wave two. The wave two bottom is actually in March of 2020. If that's the case, we can anchor our entire Fibonacci extension tool on this 1-2 combination. So we have a large 1-2 combination, and that could lead us to quite some fireworks. So I'll touch on that in a second. Let's look at a little bit closer picture here. So we had a rally that started again in March of 2020, took some time to gain steam, but then we rallied up in impulsive fashion, and we completed what I am considering the third wave of this rally. And we recently finished wave four. That's that ugly correction we just had. That would leave us wave five. So based on our common Fibonacci extension targets, fifth waves will typically target the 0.382 extension, the 0.5 extension, or the 0.618 extension of your overall 3-4 sequence here. Another clue here that this is a third wave is that when we look at this 1-2 structure, and when I run a Fibonacci extension, it shows that we just surpassed the 1.68 target. That's a pretty robust rally. We didn't quite hit the 1.764 target, which is typically what you see at the completion of a rally for the fifth wave. So those are a couple of reasons why I think this is a third wave. And finally, the fourth wave pulled back really hard, but it held the 0.618 extension, and it's nowhere near the top of the one wave top. So these are, again, all hints that this is an impulse wave forming. It's not a diagonal, and that we have a bullish perspective here. As I promised earlier, while this pattern is telling us we're going to get to $391, provided that everything holds, the alternate pattern is pretty exciting. So the alternate pattern calls for the idea that we've had a huge 1-2 combo that took a couple of years, again, the two ending in March of 2020, and that we're actually completing this in standard Fibonacci pinball sequence. So typically in that sequence, you expect your subwave one to hit the 0.382 extension. And you can see that we have a small wave one that hit that exact target. And we held a wave two to the right support level. Wave three typically hits the 1.0 extension, and we didn't quite make it there, but we got pretty close. I'd say it's close, but no cigar. The pullback, while deeper than I would like ideally, is still somewhat reasonable. Typically don't want to go below the 0.618 support level, but because we didn't quite make it to the 1.0, I think it's acceptable. It fell a little bit lower than you'd expect. Provided that that's the case, here's where the alternate pattern in red differs from purple. Our subwave 3 should actually target higher than that. We should be looking at a 1.382, subwave 5 target should be at 1.382. That would be the top of a larger 3 wave. So that's what that Roman numeral 3 is. So once again, I'm going to repeat here, big picture. 1, 2, and our 3 would top out at the 1.382 extension, which is at $1,034. That's where that $1,000 target comes from. If that happened, we would expect a prolonged pullback, maybe not that deep, but fourth waves are typically really long and they're demoralizing. So this is just representative here. This doesn't represent the actual time, but rather a price level. We'd expect this thing to pull back down to maybe the 1.0, maybe lower. And then you'd eventually have a final larger fifth wave rally that would take us to over $5,000. As you can imagine, there's a lot of things that would have to happen first to get that point. So let's get that $5,000 number out of our heads for now. Right now, we are working on completing this impulse. So again, two paths we can take. The primary path in purple takes us to $391, somewhere in this purple box. If we do rally beyond that in an impulsive fashion and hold, we may get to $1,000 or more in a larger wave 3. So one other thing here, for all these things to hold, we need to hold this red support level here, which is sitting right around $25. And I got a warning right here. If the price gets below that, we may be in for a much longer, much prolonged bear market situation here. So again, that red line is support. Let's shift over to our micro picture. What's been happening in more recent times? Well, here we also have two alternative perspectives. This light blue perspective is my primary, so I'm going to dig in that first. This perspective assumes that our official bottom was actually a truncated fifth of this larger C wave correction. So that anchors at about $37, $38. We have presumably completed a first wave, a second wave, and we're in the midst of a third wave right now. Based on this 1-2 setup, we'd expect our third wave to top around the 1.382 to 1.618 extension. We're not there yet. The going has gotten a bit choppy, but so far we're holding. We may make it there. If we get there, we'd expect to correct a pullback for a wave 4. Shouldn't really go below the $60 mark. And then we top out right around $78 to $82. That's what we'd be targeting relatively quickly if this pattern holds. At that point, we'd have a corrective pullback, which typically will fall to about where the fourth wave fell within the structure. Could have a stronger pullback at that point. But right now, we need to get to that target and we need to hold this level right here. 57.60 is our support level for this microstructure. If we break that, we might have a lower low coming. So hold your horses, be patient here. The alternate perspective in red is that we've already completed a larger 1-2 structure here. So the top of the one would be at $63, the bottom would be at $38 for wave 2. And that would project us to a high of somewhere between $91 and $98. I think I had a typo in my own script. So that would lead us to a larger wave 1 rally, which is good. We like that, but we also have to remember that this was a really deep retrace. We retraced more than 76.4% of that 1-2, and the wave 1 is really funky looking. We got this wave 1, we have a subwave 2, a strong subwave 3, then a barely visible wave 4 and a tiny wave 5. So it's non-standard, not what you'd expect. But if that's the case, again, red pattern would take precedence. So we'll see how this thing unfolds as we go. And again, the key number here is 57.55. We need to hold that, or else we may be looking at lower low, different pattern, maybe a diagonal, something like that. As for your positions, if you've been doing dollar cost average, again, keep doing what you're doing. We're still in a bullish stance. I don't see any reason to worry yet. We don't have any clear signs of a downward impulse. None of the supports have broken yet. If you have a lump sum, however, I will advise that you be more cautious about that. If you're trying to put in a big chunk of money into Ethereum Classic, at least wait for this wave 1 to complete. If we are following this larger red pattern, I would recommend letting that complete just because of the deep retrace. We really need to see this thing get up to the $92+ range and then pull back correctively in a wave 2. At that point, you can start deploying larger lump sums to get a bigger position at Ethereum Classic. But overall, well, as always, we're waiting for the pattern to prove itself. Until the supports break, we're going to maintain what we have. And provided that things hold, we may have quite some potential in Ethereum Classic. So thank you for watching.